History is written by the victors, but in global finance, it is written by the survivors. In March 2023, a bank that had survived two world wars, the Great Depression, and the 2008 global crisis simply stopped existing. Credit Suisse was 167 years old. It was a pillar of the Swiss economy, a symbol of stability. But behind the mahogany doors and the glass towers of Zurich, a rot had been festering for decades. This wasn't a sudden accident, it was a slow-motion suicide. To understand the fall, you have to understand the prestige. Founded in 1856 to fund the Swiss railway system, Credit Suisse was the bank of the global elite. But by the late 90s, the careful Swiss way of banking was replaced by a hunger for high-risk American-style investment. They started saying yes to everyone. In 1999, it was the shredding party in Tokyo, where employees spent all night destroying evidence of illegal transactions. By 2013, they were caught in the tuna bonds scandal, where billions meant for fishing fleets in Mozambique vanished into military kickbacks. If the scandals were the illness, March 2021 was the heart attack. Within a single month, the bank was hit by two massive preventable disasters. First came Greensill Capital, a firm that collapsed overnight, taking billions of client money with it. Then came Bill Huang and his secret firm, Archegos. While other banks saw the red flags and got out early, Credit Suisse stayed until the very end. When the dust settled, the bank was left with a $5.5 billion hole in its balance sheet. Trust is the only currency a bank really has. By late 2022, the bank was on life support. Then, the internet joined the chat. A single viral tweet suggesting the bank was on the brink of failure triggered a digital bank run. In just 3 months, customers pulled over $100 billion out of their accounts. You can survive a bad trade, and you can survive a scandal. But you cannot survive it when the world decides they no longer trust your vault. In March 2023, the Swiss government forced a shotgun wedding. They ordered their rival, UBS, to buy Credit Suisse for pennies on the dollar to prevent a global meltdown. The story of Credit Suisse proves that no amount of history can protect you from a bad culture. When a bank stops being a vault and starts being a casino, it is only a matter of time before the house loses. The giant didn't fall because of one bad trade. It fell because it lost the one thing it was built to protect: your trust.